Give us a breakdown on what the data means to you and the team and what it could mean for the BOE.
Hi, good morning. So today we definitely had a good print, and it was a good print everywhere in all the details. So we had that big drop below 4% in the headline number, but then there was disinflation. It was sort of broad-based, and then in the services measure, which is what the BOE is kind of paying most of attention to, it also fell to 6.3% from 6.6, when we had kind of expected to remain, sticky, and it came well below the BOE's forecast. I think the most important detail actually is within the services headline, the services measure, just because last week we heard the BOE saying that not all downside news in inflation were good news because they needed to see the sticky components of inflation moving. And today we had exactly just that. So when you break down services inflation between energy intensive and non-energy intensive being the stickiest part, that was that was what drove the fall in services. So that's exactly what the BOE wants to see.
Anna, good morning. We're seeing about 140 basis points of cuts priced for the Bank of England for next year. Do you think that sounds a bit right, or is that now looking too aggressive?
I think that still looks a bit aggressive. I mean, like this data print definitely increased the chances of an earlier cut. So we have our first cut in June. We think they will cut by 75 basis points. It's true that this measure left the 2% a little bit closer. So we actually think we will get it by May. And that means that the May cut is a very real possibility. But I mean, cutting that aggressively just doesn't look that, realistic right now, just because, the BOE will need to see the data. Number one, they're still very data dependent. They're still focused on wage growth, and that's still not very consistent with levels of with the inflation at 2%. And then I think they will still probably want to wait for the spring budget that will still have some fiscal easing, and that might also pose a threat, to inflation. So I think, May earliest, our base case is still June. May might be the earliest, but in any case, we are looking at 75 to 100 maximum basis points of rate cuts.
OK, so we watch the spring budget quite closely then, I suppose, Anna, in terms of what that might do to inflation. Is there a risk then that as inflation has come down quite convincingly, this disinflationary trend seems to be working, there could be a risk in 2024 that inflation re-accelerates, do you think, or not?
I think that's still the big question, not only for the UK, but for the US and the euro area. I mean, it's very different to touch 2% than to settle at 2%. And I think historically, central banks are very aware that historically that has been kind of the mistake. So they've kind of let go of the inflation fight too soon. And then there was kind of a reacceleration of price pressures. I think what will happen to the economy will help determine that. Because if we are seeing this fast disinflation and if the economy continues to hold up, it might be that it's kind of this best case scenario and kind of soft landing, no employment or output losses. But it might also be, the risk is that if the economy holds up, then we'll just have a pickup, in price pressures further down the line. So yeah, that's still a risk, and the BOE is very aware of that.